Some of the most brutal inflation numbers in this morning's report coming from insurance, home and auto insurance spiking for millions of Americans. And many of you are probably asking, why? Contessa Brewer follows the insurance industry and joins us now. It's a big story.
You have questions. I have answers. I cover insurance. So I hear it all the time, the shock and the awe when people open the bill for their insurance premiums. They're getting sticker shock, and CPI bears it out. It does not break out home or renter's insurance, but auto insurance up 22.2% over March of last year. And since February alone, prices jumped 2.7%, so almost 7 times higher than the broader inflation reading. Insurers are paying out more on claims, though. Motor vehicle repair, look at this one. It jumped 3.1% over the previous month. Car and truck rentals up 5.7% in a month. But you know who likes higher insurance prices? Investors. While the rest of the market slumped today, look at shares of Progressive up, still less than 1%, up a little more than 0.5%, but still in the green. Allstate up 0.8%. Travelers up 0.25%. And more broadly, Arch Capital, Hartford, W. All Berkeley all ended the day in the green. Property insurers, of course, are facing many of the same issues, though higher prices for repair and replacement, a significant challenge with the amount of lawsuits filed and the costs of settlements and verdicts. And then there's the regulators in every state, some of whom have been very slow to approve rate hikes that match what the insurers are paying in loss costs. So the head of the trade group that represents property and casualty insurers told Squawk Box this morning there is a long way to go before there is some kind of parity between what gets spent on claims and what's being brought in premiums.
It's a weird thing because, a lot of people on Twitter, X, whatever, they'll say, well, the insurance companies' stocks are soaring. They're printing money. And some are, mostly in the car side. Progressive, their stocks are up. But at the same time, State Farm and a bunch of other home insurers are getting their credit ratings cut.
The insurance industry as a whole has seen their credit ratings downgraded. And part of that is because climate risk is volatile and unpredictable. $100 billion in insured losses last year. It's the 4th year in a row that that's happened. And half of that was from thunderstorms in the United States. That is just very difficult even to model that kind of insured losses based on thunderstorms and hail and things like that. They're all covered perils. And they didn't reach a level, any single event, where reinsurance would have kicked in. So that's, for one thing, climate change. For the second thing, the regulatory risk and the litigation. Those are real expenses. But the other thing is, for years, they have not been bringing in the premiums that matched what they've been paying. And so this is lagging. And
they've been losing money, in other words.
And what we're going to see, yes, but while they've been making money, Chubb had a record year last year.
State Farm losing billions.
Allstate, which is publicly traded, has had a really tough year because of what they've been paying out. But the trend is that the rates are going higher, and a lot of the insurers, I'm going to use Chubb as an example, it has managed its risk differently, so it's not so exposed. It has invested differently, and it's making a lot of money on its investments, and that's why those insurance stocks are still going up. Plus, and the investors think we're in an upward trajectory with rates. This is going higher.
Well, and it's an important thing for people to understand. They just assume that Chubb is making all this money because they're, I was going to. Anyway, you get what I was about ready to say. Fleecing.
Right.
Kind of trying to find a family-friendly word, but what they're doing is that they're getting out of riskier areas, right? I grew up in Southern California, and there's a hill behind me that used to burn every 3 years. It caught on fire every 3 years, just catch on fire. Now there's homes. The whole hill is houses.
And some of them very expensive houses.
Yes, it's
People
California.
More expensive
million plus. I'm like, every 3 years that hill used to catch on fire randomly.
So now what happens is you either have to go to the state insurer of last resort and pay a lot of money for not enough coverage, or you go to an excess and surplus line, which Chubb still offers, but you're going to pay through the nose for it.